Onto your markets now. Asian markets closed up in positive territory, taking their cue from the performance of the US market the night before. It said that concerns about a potential trade war have been allayed, while a decline in US Treasury yields was also attributed as a contributor to a more upbeat mood. The Japanese market registered gains for the third consecutive session, with the Nikkei breaching the 39,000 index point mark. The Nikkei share average rose by 0.61%. The Hang Seng Index gained 1.22%, while the Shanghai Composite Index closed up 1.3%. Wall Street saw stocks ending the session in the black, although sentiment remained mixed. There were some disappointing corporate earnings that saw some tech companies decline. For example, Alphabet's share price fell by nearly 8% after the company missed revenue expectations in its cloud division, while it also revealed that it had spent more than expected on AI initiatives, while Uber's shares slid by 6% after it issued a weak first quarter guidance. The Dow Jones Industrial Average rose by 0.72%. The S&P 500 gained 0.4%, while the Nasdaq Composite Index closed up 0.2%. Here locally at home, we see that the all-share index is up in positive territory. It's up at by 0.6%, and the rand is trading at 18.59 against the US dollar, 19.26 vis-a-vis the euro, and 23.09 against the British pound. In terms of the commodities, we see that gold is trading at $2,860 an ounce, platinum at $988 an ounce, while Brent crude oil is trading at $75.14 a barrel. All right, let's take a look at the markets with Mohammed Wagli. He's a portfolio manager at Sasfin Securities. Thank you so much for joining us, Mohammed. Happy New Year to you. It's our first time to speak this year. So what's your assessment of global markets, and what do you see as the drivers?
Always a pleasure to be here on Point, Nompu. Thank you very much, and needless to say, a happy New Year to yourself and your viewers as well. So there's been quite a bit going on. I think both locally and globally, we're seeing quite a bit of choppiness. I would attribute that to the uncertainty that the market is feeling regarding President Trump's administration, his rhetoric around tariff policy, and to what extent that might be inflationary. I'd say that's probably been the big narrative permeating throughout the market currently. A lot has been said, and I think the market, like everyone else, is trying to figure out what this new normal is going to look like. You also touched on this a little bit earlier. We're getting quite a bit of corporate earnings news. We're pretty much in full swing there. Some of the big companies, your Amazons, Metas, Alphabets, like you mentioned earlier, have been under the spotlight. And, needless to say, market sentiment is very heavily influenced by the performance of those magnificent 7 stocks, just so we can see sort of what the current developments in the AI space is going to be. That's really been sort of the trigger word in global markets over the past couple of years. So yeah, to sum that up, in terms of drivers, there's quite a bit going on in markets. We've got the policy decisions, we've got trade wars, and then we've got earnings. And I imagine that this will continue to be the case, at least in the next couple of weeks or so.
Yeah. What about the whole DeepSeek saga? Was that a flash in the pan? The tech side of things seems to have calmed down now.
Yeah, it has calmed down relatively, but I think you touched on a very good point earlier when you mentioned Alphabet. So sort of the whole thing with DeepSeek is that they were able to do this without the latest sort of technologies that other companies like Google, like your Metas, like these sort of big magnificent 7 companies were using, So from that perspective, I think cost effectiveness when it comes to AI sort of came to the forefront. And then when a company like Alphabet mentions that they've spent a little bit more than they thought they would, that tends to have an impact, and I think is why we saw a negative reaction in that respect. But I wouldn't say it's down completely, but we aren't seeing sort of the level of panic that we were seeing, I suppose, towards the beginning of last week when we did get that news.
Yeah. So what are the implications of the United States indicating to South Africa that it won't be participating in G20 because it views the country holding the presidency as being an anti-American, having an anti-American agenda? I mean, have we seen anything play out in our bonds or our local currency, for example? Is there likely to be panic on the markets given this posture?
So it does sound like President Trump has finally realized what the S in BRICS stand for, and it is not Spain. So just on the G20, it exists sort of for both developed and developing countries to address issues surrounding the global economy. I think when one thinks G20, the big thing that comes to mind is discourse around climate change. Now, from that perspective, the US, at least the US in its current iteration, is pretty much all in on fossil fuels. Think about sort of the whole drill, baby, drill rhetoric that President Trump has been using. But that being said, it's not unfair to say that we as South Africa have been politically aligning away from them for the longest time. I don't think they appreciated the ICJ case that we brought against Israel. We're obviously one of their biggest allies. Again, there was a lot of noise around Iran funding that. So needless to say, they wouldn't have liked that either. But I also do feel that because we are now presiding over the G20 this year, that's given them somewhat of a, let's say, a little bit of a convenient excuse to avoid doing something that I would say they probably weren't that keen on in the first place. Now, in terms of how that is going to affect our market, how that's affected our market thus far, I think we will see some volatility going forward, especially if we see this type of rhetoric continue. But if I look on the day, and you did mention this earlier, it's pretty green. The all shares up 0.6%, and I'm seeing quite a bit of green pretty much across the board. I do see a little bit of softness here in the rand, but that's nothing really to write home about. It wasn't too sort of a big movement, In terms of panic, I think we will see some panic. I think we've seen a lot sort of in the media about it already. But if we look at markets, there's not been too much. I think it just depends on how much further this rhetoric goes, to what extent it continues.
Yeah.
I think that's really what to watch out for.
All right. Mohammed, one last question. As a fund manager, keenly looking at the dynamics and fundamentals of the South African economy, what are you hoping to hear from President Ramaphosa this evening at the SONA?
Yeah, so I think for any local investor, this one's going to be quite important. It sets the economic tone for the year. I think there's going to be quite a bit to unpack. First and foremost, though, I'd be looking for guidance as to how they're going to be tackling our, it must be said, tepid growth rate. We'd like to see some proactiveness in that respect. I think another key thing would be the view on how we're going to be incentivizing investment in South Africa. And again, that's probably going to be linked to, the energy crisis that we're seeing. So to that extent, comments on Eskom and how that situation is going to be managed will be quite important. I think given the spotlight around sort of land policies recently, he may want to comment on that as well. But truth be told, I'll probably steer clear of that. But there will be questions in relation to that as well. In terms of how the market's going to react, I think a lot depends on sort of how feasible and how detailed the speech is. So a responsible pro-growth approach, I think, could lead to rand strength, could lead to a bit of a rally in the stock market. But on the other end, if we get a bit of vagueness, if we get some feedback that's maybe too political or hints towards spending that isn't so sustainable, that might have the opposite effect. So I suppose for the time being, we wait and watch, but a lot at play.
All right. Thank you so much, Mohammed, for your insights. As always, Mohammed Wagley, he's a portfolio manager at Sasfin Securities.